Hello, this is Suzanne Long, accounting professor with Jackson College. Today we're going to be working on the cash budget. Now there are lots of different budgets that we could work on, including the production, manufacturing, master budget series. But for today, we're going to be working on the cash budget. Before I zero in on this file, I want to show you what we've got here. Over on the left, we've got the information that was given in the problem. In the middle, we've got the final work required for the problem, the cash budget. So that's it. What you see in green is what we're doing. And over on the right is my supporting documentation. All right, let's take a look at this problem. Okay, so the information provided we have in the gray box here, sales and costs and expenses. That makes sense because we're going to do a budget. And then we've got what this business describes as budget expectations. So we see these details here. For now, I just want you to kind of scan this list. And some of it might make sense, like this last one, like, hey, that's pretty clear. And some of it might look confusing. 70% of credit sales, what? So just want you to kind of scan it. So we have in the box numerical data on revenue and expense, cash in, cash out, and then in words we have descriptions about cash in and cash out. All right, let's look at the budget itself. So in green you see the budget, and we've got a section up here for cash receipts. Notice we're doing 1 quarter or 1 3-month period of time. And we've got for this business, why does this business receive cash? So this business receives cash sales. So at the point of sale, there's cash collected. But there's also cash collections on credit sales. So this business is also selling to customers on credit, and customers can pay later, will receive payment later. Accounts receivable, collections on receivables. So we're going to see both. Cash disbursements. You see, okay, how and why is this business using cash, spending money? Okay, they're paying for capital expenditures. I'm going to go ahead and make that one the same. Capital expenditures are things like buildings, equipment, land, physical, permanent, long-term assets, property, plant, and equipment, capital expenditures. Then we've got manufacturing costs, and we've certainly seen a lot of those, right? Manufacturing costs, materials, labor, overhead costs, general and administrative costs. And we saw a lot of these in Accounting 231, rent and interest and payroll costs and all of the things that it takes to run the business. So we've got all these kinds of costs and expenses, cash going out, and we're also paying some dividends. So that's just kind of a little special one there. So cash in, cash out, financing. So this is, and we're going to see this special requirement for this bank account. Do we have to borrow money? Do we have to pay money back? Kind of like a line of credit kind of thing. And at the bottom, we'll go through the cash balance. And then over here on the right, I'm going to get into my notes. All right, let's get started. We can go from the top bottom. We can go from here. I think I'd like to go from the top bottom. So I'm going to start with sales. Sales up here at the top. And we're told some of it's cash sales and some of it is credit sales. So I have this little sheet over here where I'm going to show more detail on revenue and cash collections. And I want to show you something in Excel. So I'm going to click on column F. So I clicked right on top of the F, and I'm going to go into View and Freeze Panes. And that will let me sort of cover up like that green part, and I can put my left side next to my right side. You can do that top and bottom. You can do it, horizontally or vertically. Okay, I want to get this stuff over here. So I'm just inputting. Got it. And I'm looking at this first note, cash sales equal 10% of sales. Okay, so that's going to be really easy, right? What's 10% of 510,000? Use a formula. Equals this times 0.1. And then copy that formula over. Okay, so when we see, yep, bam, that's my 10%. And I'm going to put that in, let's see, should we do a color? Should we do bold? Let's do a color. Let's make that, how about purple? Just something different. Purple means I recorded it. It's done. So I put that over here. I put that over here. I'm good. Now, credit sales is, well, what else is there? So there's total sales, cash sales, and the rest of it. So credit sales is the rest of it. And then down here, I went ahead and threw in a couple of journal entries I thought we might want to reference. Sales on account, that's up here, and then collections on sales, that's here. So right now we're focused here. What are the credit sales? What are the sales on account? Sales on account is the same thing as credit sales. Credit sales, sales on account, accounts receivable. That's credit sales. So they say credit sales, and don't say anything about credit sales, do they? They just say cash sales are 10% of sales, and then later it talks about credit sales. So you have to kind of stop yourself and say, okay, so I need the rest, or I need the 90%. Total sales 510, cash sales 51. What's the difference? So let's do that. What's the difference between the total? I had to kind of sneak in there. The total and the 51. So this cell minus this cell. And then what happens if I add these up? So I had an auto sum in there. So the total, same in yellow, is made up of these two numbers. Part of the 510 is 10% cash sales, and part of the 510 is 459 credit sales. I used a formula right here. I'm going to copy and pull it over. Notice that my fill handle is a really thick, dark black plus sign today. It doesn't usually look like that. That's kind of interesting. Okay, so I'm analyzing sales. They gave us the yellow. They gave us the 10%. I had to calculate credit sales. And these three numbers right there are really, really important. Notice there's one over here. I'm just going to go ahead and pull that over. April credit sales, 400,000. Okay, so that takes care of this part. What is credit sales? And maybe we could use this one as an example. May credit sales are 459. So if we were to journalize May credit sales, it would look like that. Debit accounts receivable, credit sales. Credit sales for May, 459,000. Okay, now let's do the cash collections. The collections. We need the cash collections for our cash budget. How much of that 459 is received by the business in cash during May? Let's go back and see what it says here. 70% of credit sales collected in the month of sale, the remaining 30% the next month. 70% in the month of sale. So May and May, 70%. 70% of 459 happens to be 321.3. That's what's being collected in May. Let's get that up here. Collections on May in May. So I want to be right here. May and May. Collections on May in May. May times 70%. And the remainder in the following month. So now this is collections on May. I'm still right here, but now the collections coming in June. 459 times 0.3. And I want to see this 459 tie out, balance out, reconcile. So we could do another one of these. We could say June cash accounts receivable for the 137.7. So that's the deal with this 70% month of sale, 30% in the next month. Let's go back and do April. So April to April, during the month of April times 0.7, the following month times 0.3. Watch for the 400. Let's do June. So I want June and June equals June credit sales times 0.7 next month equals June credit sales times 0.3. And mathematically, it's like, well, if I take that number and split it 70-30, it better add up to 405, right? And the last one for July. July times 0.7 next month, July times 0.3. 70-30 total equals this. Yep, we're good. Now, the reason why I'm showing all of these months here is that some students like to see the whole thing. Like, show me the whole thing for April. Show me the whole thing for May. I want to see both pieces. I want to see the whole 400,000. I want to see the whole 459. So I added in a month before April and I added in a month after for August. But I'm kind of doing the bold thing up here for, hey, but this is what we're going to be doing in our work, in our problem, is May, June, and July. Okay, I'm going to go ahead and release, unfreeze panes, and I want to get this information recorded in my cash budget. So cash sales for May, June, and July is right here, cash sales, May, June, and July. So I want to get that in. 51, you can type it in or you could use cell references, either way would be fine. Now cash collections on April sales, credit sales, is going to be just this piece right here, the 120. April coming in May. April coming in May. Oops. That's it. May coming in May and June. May, and June. Okay, right there. 321.3. 137.7. Oh, that didn't come out. 137.7. And then June and July. June, 2835. And July, 121.5. And July is just going to be July because we're not doing August. So just July for the 346. Now I had some auto sums going here and here, so my file is filling in nicely. So we are done with cash receipts. And over here, I was using purple to say, like, let's do this. All of this is taken care of. Sales is taken care of and analyzed. Cash sales, credit sales, all that is analyzed and recorded. I'm done. So the purple means I'm done with this information. Now let's scan over here because now we're going to be working on cash disbursements. Let's see if there's some easier ones. Okay, we're going to have let's wait on that one. Manufacturing, general administrative, paid in the month incurred. Okay, so that's going to be an easy one. Like manufacturing, May, 150 is going to be paid in 150. So let's find manufacturing. Here it is, manufacturing. So we're going to input 150 and, oops, 150, watch your zeros, and 280 and 250. So this information here, 150, 280, 250, gets input right here. We're done with manufacturing. This note also said general administrative was the same way, paid in the same month, and that's right here. So these three are going to be general administrative, these three right here. All right, let's get those in. 70, 210, and 100. 70, 210, 100, 72, yep, we're all good there. And I'm going to highlight, say, yep, I'm done with that. And yep, I'm done with that. Oh, look at the next one. Dividends declared in June, paid in July. Remember, this is a cash budget. So dividends, when did the cash go out? July, and it was 3,000. takes care of that one. And from here down has to do with the ending balance and if we have to borrow money. Let's hold off on that. Let's go back and pick up this one. Just take a minute and look at that little note about how we're going to pay for capital expenditure purchases. Remember, capital expenditures are when a business purchases big long-term assets like equipment or a building or something like that. 60% paid at the end of the month. It would be like end of the same month, and the remainder in the following month. And we've got capital expenditures. Let's start with the $400 in May. So for $400,000 in May, 60% of that is paid in May, 40% remainder is paid in the following month in June. So we got 400 total. May 400 total is going to be split May and June, 60%, 40%. Let's get that in there. I'm going to go ahead and type this all the way out. Equals 400,000 times 60% equals 400,000 times 40%. And we see that, oh yeah, it better add up, right? It better add up. And let's do the same thing for July. So the other one is 120 in July. So this is going to be right here, July and August, but we don't have an August. So we're just going to do July. 120 total times 60% for July. So that's it. And then you kind of like, does that seem like, yeah, that seems about right for 60%. And I can get rid of that, and I can get rid of that. One of the other journal entries I put over here was one of these. So we could say like July, they said machinery was one of the options. So we'll just make this machinery. And it was, how much was it? Capital expenditure, July, 120. That's right. So we'd have 120 for July. Oops, another zero. That's a capital expenditure on account. Purchase, we'll make the wording consistent. Capital expenditure on account. And then what happens when you pay it off? So in this case, we're paying 60% during that same month and 40% in the next month. I don't know why that's bold. You never know. So that's what's happening with capital expenditures. And we see it pop up right here. May and June, July and August, we're not reporting August yet. So just kind of scanning. So far so good. Does anything look out of whack? Nope. I don't remember this number. That doesn't seem right. 1481. Yeah, let me check something real quick. Nope, that's right. Sometimes I get numbers stuck in my head, and sometimes those are the right ones, and sometimes they're from something else. So we're good. Cash receipts section is all done. Cash disbursement section is all done. Now we can finish off borrowing and final balances. Notice these words down here. Let's look at this whole section all together. There must be at least $10,000 in our bank account at the end of the month each month. Why? Well, some banks have these financing arrangements where it's a combination of the business has deposits on account with the bank, but they're also borrowing, and it's a combined package on rates as far as how much you would have to pay in interest on what you're borrowing versus how much you would potentially earn on interest. So anyway, this particular arrangement is a minimum 10,000 cash balance. This is also good for businesses that have a big swing back and forth in cash. It can help with that. Excess cash has to be used to pay off any loan that's out there, any of these bank loans. So we'll play around with all this. Balance of note payable at the beginning of May is 0. Okay, so we don't owe the bank anything to start this particular cash budget. Loan borrowing, May, 0. That's this one. We can kind of like check that off. Balance of cash May 1st is 15,000. So let's get our beginning cash balance in there. So we're going to start at 15,000 and we can check that one off. Okay, well, let's see where we're at. We've got, and we're going to look at May 1st, cash receipts, cash disbursements, no borrowing yet. Beginning, let's see where we are. So equals right here, cash receipts, and equals cash disbursements. And I could pull those over. So these three now show up here, and these three now show up down here. Oh, by the way, notice that everything is positive. Everything is a positive whole number. And as we're working through these, like here, I did a formula equals beginning plus receipts minus disbursements equals ending, that kind of thing. So we've got an ending cash balance of $47,300. Do we need to do anything? No. Must be 10,000 cash balance at the end of the month. Okay, we're good. We've got 47,000, so we're doing just fine. We do not need to borrow anything, and there's nothing to pay off, so I'm just going to put another 0 in there. So these are both 0. Look at the next month. That doesn't look good, does it? And let's get the beginning balances. So the end of May becomes the beginning of June. So these are going to be the same number. I recommend a cell reference equals, click, enter. And you could copy that or you could do it again right here. So you see end becomes beginning, end becomes beginning. So, look at June. We have way more cash disbursements than we do collections. So we're down to a negative cash balance of $136,500. I don't know about you, but that I think would give me a heart attack if I was a business owner. So the arrangement with the bank is, hey, no big deal. You're just going to borrow, but you have to borrow enough so that you have 10,000 as a minimum balance. So this has to be $146,500. And that's going to be added to our inflows, $146,500. That 146 gets us from the negative 136,500 to a positive whole 10,000, and that's what we're required to do. We have to have 10,000 in there. It's not enough just to get to 0, which makes sense, right? Because the business is writing checks and payroll and things like that. You got to have something in there. Loan repayment? Nope. Nope, we're just strictly borrowing. So another one of the journal entries I put over here for a kind of a visual is what happens when we borrow. So this was June. We borrowed $146,500. What happens when we're borrowing? It's debit cash. It's cash. We're borrowing cash from the bank. Debit cash, credit note payable. Okay. Let's see where we're at with July. Looking better. More cash receipts than cash disbursements. That's good. Ooh, we're at 108 right there. Looking good. So remember over here, oh, I kind of liked it where you could see the top there. Oh, that's kind of nice. I can see the top and my little check figures. Remember it said excess cash has to be used to pay off outstanding notes payable. So we certainly have an outstanding note payable. We've got $146,500. The arrangement is you have to pay it off. So we have to pay off what would be $98,000. We have to leave $10,000 in there, so that would be $98,000. And that's going to be an outflow. So minus 98, and then, oh, what did I do? Oh, I'm subtracting the whole thing, so it needs to be a plus. It needs to go up. That's right. So I need to do what was my, let's see, it'd be 425 plus 98 to get to 523 because I'm subtracting 523 here. Okay, so that takes me down to 10. I'm not borrowing anything more. And we're done. And I dropped in these checks just because there was so much detail in this problem. I just want to make sure I didn't have a typo or something as I was going along. Yeah, typos. So first month came out kind of clean, so to speak. More receipts than disbursements were fine, way over the 10,000. Second month we were way below, so we had to borrow to get to 10,000. Third month we were more receipts than disbursements, so we were able to pay back quite a bit of it. So you know how I like to do these bonus questions. My bonus question to you would be, what is the balance in notes payable at the end of July? What is the balance? What is the balance in notes payable at the end of July? So we borrowed and we paid back. What have we got left? What would this little special question be right here? So you could see it. This is kind of linear. Notice that this budget is not journal entries. This is not a T account. This is a schedule. This is not like what you've seen before with the accounting system per se. This is not a trial balance, debit credit. This is not a journal debit credit. But what we're seeing down here is this is the information for the credit and the debit and the note payable account. That's kind of the question I'm getting at here. So the balance is, I borrowed 146 and I paid back 98, so my balance is 48,500. You could also do a little T account if you wanted to show it that way. So that is, oh, and we can check all this stuff off. Yep, we did all that. That is how to do, oh, it was a different, at any rate, that is how to do a cash budget. So my big suggestion is to have some extra space if it's in Excel. I highly recommend using Excel, using formulas, practicing that skill. Of course, you can also use a sheet of paper. That's just fine. Especially the first couple times you practice, sorting out, hey, what's going on with sales? Okay, I got to split out cash sales versus credit sales. Yeah, okay. And then with each layer of credit sales, I've got to figure out what's going on, what month it's being, we have the cash collection to the business, how does that shake out? So give yourself some time and space to do that so you can practice that. I would say this is the hard part. Definitely more analysis going on there. My little journal entries here, these are just to kind of tie back and ground you in what you already know about accounting. How does this stuff work and what are we doing now and what's going on with cash? My little bonus question there. The answer to this problem is the green bullets, the cash budget for May, June, and July. That's it for today. Take care. I'll talk to you soon.